Okay, dokes. I mean, it seems a shame for us, Steve, to have to continue to cover Google's Obituary now that it's a dead company and AI has smashed it to pieces. But here goes, Steve. Revenue came in at just 90.23 billion. That's up 12%, which was more than the analysts were after because they were only after 10% growth in this dead company. EPS came in at $2.81, Steve. That was only up 49%. Wall Street wanted $2.01. Net income, 34.5 billion. That was only up 46%, Steve. And I mean, annualized, that's about what Slovakia does. Not annualized, that's what Georgia, Iceland, or El Salvador can do. Although it is key to note that this includes about 8 billion in unrealized gains from Google's investment arm. Cloud, 12.3 billion, Steve, up 28%, about 2.2 billion in operating income from this division alone. A 70 billion buyback has been approved, and a huge hike in the dividend, Steve, of 5% to 21 cents per share. Looking forward to that arriving. So yeah, Google services, Steve, they reported about a 30% margin when ChatGPT was released. And obviously, those margins have been completely eroded now, as the world said would happen. And they're now only 12%, 12% higher, 42%. Probably best we don't trust the internet anymore. So look, a quick rundown for the rest of the results, Steve. Search was up, YouTube ads was up, Google ads was up, subs was up, Cloud was up, and the only things that were down were Other Bets and Google Network, and the latter was just marginally down. There were some decent remarks, some little bits and pieces of information in the call. They said, obviously, they talked about the strong financial performance, that there was a double-digit revenue growth in search, which is just amazing, considering it's the dead business. Significant growth in cloud, 270 million people now on paid subscriptions with Google. AI leadership, they talked about Google's full stack AI approach, and they said that's central to the growth, and that Gemini 2.5, which has just been released, is recognized as a leading AI model. Lots of AI progress across Google. They said infrastructure research and product progress was most sort of bountiful for them. They've made some significant investments in a robust global network, including buying advanced TPUs and GPUs and continuing a strong partnership with NVIDIA. In terms of research, they said they've released advanced models like Gemini 2.5 and Flash and Imagen 3 and VO2, the image and video producers, Gemma 3, and significant user growth in their AI Studio and their Gemini APIs, development in new areas like robotics and health. They've released an AI co-scientist and something called AlphaFold, and also an integration of Gemini models across 15 products with over about 500 million users now. That includes things like just the Android operating system, the Pixel system, and then upgrades to Google Assistant, Gemini's live camera, and screen share sharing are all rolling out. So they reckon their AI overviews have about 1.5 billion monthly users now. The AI mode experiment is showing quite positive early feedback for when people ask Google quite complex queries. They're saying the growth in multimodal searches like circled search, Steve, which we've talked about before, and Google Lens is really positive. And then they said that their cloud AI focus is basically leading in cost, performance, and reliability for AI training and inferencing. Vertex AI, one of their newer products, is offering a wide range of models, including Gemini, focusing on AI agents and AI agent development kits and designer software. They're also enhancing Google Workspace and cybersecurity products, and this planned acquisition of Wiz, which is their newest acquisition, will help strengthen cloud security for them. They said YouTube's continued to grow. It's actually 20 years since the first video was uploaded now, Steve. Subscriptions on YouTube are a significant part of the business, as is this expansion of the premium light model that they're rolling out in the US. YouTube now leads the way for watch time on TV in the US. And maybe something we should revisit ourselves, Steve, has over 1 billion monthly podcast users. It didn't really work for us when we tried the podcast on YouTube, but maybe something we should revisit. YouTube Music and Premium now have over 125 million subscribers, And they touched on Waymo as well. They said Waymo's doing about 250,000 passenger trips every week, which is about 5x year-over-year growth. They've launched a paid service in Silicon Valley, expanded with Uber in Austin, and are planning a public launch in Atlanta, Washington, D.C., and Miami. And progress in airport access and freeway driving capabilities, which is what people were asking for Waymo to be able to do. I didn't think there was anything wrong with this report at all, to be honest with you, Steve. Google up about 9% on the week, but only about 1.4% today. I think the market was anticipating decent results. I thought it was really strong. What did you think, Steve?
I thought in post-market extended hours it was up a bit more than that, actually, so it sort of just subsided a little bit from there, because the reaction I thought was generally pretty positive, and I also thought it was pretty positive. I like seeing companies doing intelligent things. Declining business like Google, push that dividend higher. Don't be holding cash in the company, shove it out the door to shareholders, because it's only just going to go down like a sinking ship from here. But no, I was looking at it, and when you kind of add in that 70 buyback plus the, I'll be honest, I didn't actually bother boosting the 0.5 dividend yield by 0.5 by 5% to work out what it came to after that, which was nearly nothing. But when you add it all together, you start getting to sort of 4% returns here, which is roughly in line with the. It's hard to tell where the US 10-year is at any given moment, because it depends on what Trump says. But on a kind of relatively placid day, that's about in line with the US 10-year. And the difference is that Google is probably going to grow over the next 10 years. So you will probably do better than a 4% annual return by buying this thing. And that puts it in pretty much, well, in likely buy territory by itself, if you think things are going to work out okay from this point. I was impressed by this. I was very impressed to see the ad business growing. I sort of think of this as a little bit of an upside down Amazon, in that they both have an ad business and a cloud business. And Amazon's cloud business is bigger than its ad business, and Google's ad business is bigger than its cloud business. Both of them are highly desirable operations on both sides. And I was impressed to see the ad business growing that well from Google. It had been the case sort of recently. We've been looking towards the cloud to think, okay, good. It would be nice if it wasn't mostly kind of just ad-driven stuff. That feels like a lot of eggs in one basket. So people were worrying a little bit, and then people looked over at Meta and thought, oh, actually, there's Reality Labs. Maybe you should put some more eggs into that basket you've got that does advertising. But anyway, it is nice to see more than one strong part of Google's business, Alphabet's business, doing well here. You pointed out that margins had gone 12% higher. They have. It's your favorite basis point or percentage point conversion thing again, though. It's worth noting, if you go from 30% to 42% on a margin, your profits go up by 40% rather than 12%. It's 12% of your revenues that now start becoming your profits. And if you were taking away 30 of them before, you now start taking away 42 of them. That's a big profit increase. And that's a really interesting thing to keep an eye on for this kind of company. I think it's often underrated when people look at top line growth matters, but top line growth matters in a number of different ways. It matters for how much you spend out to try and generate that growth, which Alphabet's doing very well. And you can also widen things quite quickly by adding a couple more incremental basis points to your margin, which is good. I think one reason people are hesitating at the moment is it appears to be losing court cases for the time being. The big tech companies have all had their day in the antitrust sun, and they appear to sort of move around a bit. No doubt it will be Meta again sometime soon. It has been before. Sure, it will be again. I live in fear of the day it's Amazon, maybe. But what's your latest thinking on that stuff, Steve? I was talking to some other people today who were saying, tend to just ignore this stuff. But it feels to me like it might be one of these things where the DOJ somehow, in a kind of weird mathematical sense, gets ever closer to breaking up one of these things without ever actually achieving it. But nonetheless, it feels closer than it ever has been. And yet, maybe it may not happen again in this case.
So earlier this, I think maybe last weekend, I sent you a message where I said to you I'd written a post on the, I think it's the Taoist principle. We'll see. And I said I was going to do a post on that and the lessons that you could learn as an investor. And that's basically my thoughts and feelings on it, is that we'll see how that goes. I think it's impossible to tell right now whether that's a good or bad thing, because we don't know what the final shape is going to look like. And also, if Google got broken into, I mean, if we go to the very extreme and say it gets broken into each of its individual components, how many of those businesses would you seriously look at and say, well, I definitely do not want to hold that, absolutely never want to hold that part of the business? There's not many, Steve, that you would really think that about. So in a breakup, you're likely to get, a little bit of all of those businesses when they get broken up. So yeah, I think generally my overarching point on that is we'll see, Steve.
Interesting. So I'm trying to. I haven't yet got really onto modelling that. I'm going to basically wait for someone else to do it for me and then complain about what they come up with. But I haven't got onto quote unquote modelling out the likely permutations of, say, being forced to sell Chrome. My suspicion is Chrome's quite valuable, though. You might do quite well from being forced to sell the thing. This isn't China, so they can't just seize Chrome from Google. This is the US, so they could instruct them to sell it, but that could be a valuable sale. I mean, my initial instinct when all this kind of got going and we started getting into illegal monopolization claims, this was about a year ago now, I think, that this has been kind of rumbling on and really started to gather some traction, was that this was a lot worse for Apple, than it was for Alphabet in this kind of situation. So Alphabet paid a lot of money to Apple, it turns out, to be the default on the iPhone. At the time, as an Apple shareholder, I sort of assumed that was the case and figured that was quite a valuable asset Apple had, which was a phone in the hands of people who spend too much money on stuff, almost by definition, on the fact they have an iPhone. And yeah, no doubt you could kind of lease that real estate in people's hands to somebody for the right price. I didn't think there's anything much the matter with it, but what I think on that score doesn't really make a difference. I was more disappointed to learn they weren't going to be able to do it anymore, than that Alphabet was going to have to compete its way in, as it were. So yeah, I'm also sort of interested in following with what happens on that one. Do you have any final thoughts on this one?
Nothing beyond that. I thought this was a very good report, and I'm going to put Google into the bracket with Wise from last week, where I think this is companies that get a little bit disrespected in the markets. I think this is and we've been saying it for a very long time, Steve. This is a very good business, and I think it continues to be so, Steve.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.